program is the active center.
All right, let's get into something we all get, but maybe don't really get: the paycheck. We're going to break down what happens to your money from the second you earn it to the moment it actually lands in your bank account.
You know that feeling, right? You see the big number, what you earned, and then you see the smaller number, what you actually get, and you're just staring at that gap wondering, wait, where'd the rest of it go? Well, you're not alone. So what's really going on here?
Okay, so let's put some numbers to it. On the left, you've got your gross pay, a nice round $1,000. That's the total you earned. But on the right, that's your net pay, what you actually get to take home. That difference, that kind of shrinking paycheck, is the whole mystery we're going to solve today, and it all comes down to a few key deductions.
So where's that money going? Well, the biggest piece of the puzzle is something called payroll taxes. But here's the thing. Instead of thinking of this as money you're losing, let's reframe it. These taxes aren't just vanishing into thin air. They're funding something with a really important collective purpose.
So what even is a payroll tax? In simple terms, it's a slice of your wages that your employer holds back and sends straight to the government. And here's the key part. That money is specifically set aside, it's earmarked to fund our social insurance programs.
And that brings us to the core idea here. The best way to think about these taxes is as the funding for a massive social safety net. You know, it's a system that's built to catch people when they need it most, during retirement, if they become disabled, or if they lose their job.
And where does all this money actually go? Well, it gets funneled into some huge, absolutely essential programs. We're talking Social Security, which provides income for retired folks, and Medicare, which is all about healthcare for seniors. But it also covers unemployment insurance and can even help fund things right in your own backyard, like local schools and roads.
Okay, so we've covered the why. Now let's get into the nitty-gritty of what. We're going to take a much closer look at the specific taxes you'll see listed out on your pay stub.
All right, let's run through the main players. First up, you'll almost always see something called FICA. Now, FICA actually stands for the Federal Insurance Contributions Act, and it's really a two-for-one deal. It covers both Social Security and Medicare. Then you've got your federal and state income taxes, which pay for all sorts of government stuff. And sometimes you'll even see a local tax that might go to your town's school district. Let's put a real number on this. For Social Security, 6.2% is deducted from your paycheck. But here's the kicker. Your employer also pays 6.2% on your behalf. So that's a matched contribution.
And it's the same deal for Medicare. You contribute 1.45% and your employer matches that 1.45% too. So when you put those two FICA taxes together, you can see how they make up a really significant chunk of those deductions.
Okay, this is where a lot of people get tripped up. It's super easy to just lump all taxes together in your head. But there's a really critical difference between payroll taxes like FICA and income taxes. And understanding this difference is key to really getting what's happening with your pay.
Let's break it down side by side. First, who pays? Well, payroll taxes are a team effort. You and your employer both chip in. Income tax? That's all on you. Next, where does the money go? Payroll taxes are for specific things like Social Security. Income tax goes into one big pot for general government spending. And last, and this is a really big one, how are they structured? Payroll taxes are regressive. Think of it like a flat fee. It takes a bigger bite out of a small budget than a large one because everyone pays the same rate up to a certain income. Income taxes, on the other hand, are progressive. The more you earn, the higher your tax rate goes, so higher earners pay a bigger percentage of their income. It's a fundamental difference. All right, enough with the theory. Let's make this totally real. We're going to walk through a sample pay stub, step by step, to see exactly how all these numbers add up, or I guess subtract down. Okay, here we go. Let's trace the money. We start with a gross pay of $1,000. Boom, right away, $62 comes out for Social Security. Then another $14.50 for Medicare. After that, we subtract the income taxes. And you might have voluntary stuff too, like a 401k contribution. After everything is said and done, you land at your net, your take-home pay of $839.41.
So, after all that math, let's just zoom out for a second. Why does any of this really matter? It's about understanding the bigger picture, what your paycheck represents beyond just being a number.
And I mean, the scale of this is just massive. Check this out. Payroll taxes, just those taxes alone, make up about a third of all the revenue the U.S. federal government brings in. Your contribution, plus millions of others, is literally one of the main things funding the nation's biggest social programs. It's huge.
So here's the bottom line. Your paycheck isn't just a simple transaction. It's your contribution to a collective insurance policy for the whole country. It's a system that helps provide for the elderly, the disabled, and the unemployed. A safety net that you, your family, your neighbors, all of us, we're all paying into it together.
When you look at it that way, your paycheck really is more than just money. It's your stake in society, it's your investment in the social fabric of the country. So the next time you look at that pay stub, I'll just give you with this question to think about. What does it all mean to you?